I think Bitcoin needs to go above 110,000, and on increasing volumes, maybe it reaches 150, 200,000, whatever that level is. I'm not sure, but I think that happens sometime in the summer or early third quarter, and then the rotation starts into various altcoins. I think by the end of Trump's presidency, so end of 2028, Bitcoin will be by around $1 million. Or we'll have caressed $1 million. It might be lower than that at that point, but I think we'll get to that nominal figure within the next 3 to 4 years. I think Ethereum has a better performance outlook, mostly because it's very hated. Everyone thinks Ethereum does nothing. They haven't done anything correctly, but number one, it still has the most TVL. It still has the most number of developers. It still is the most secure proof of stake blockchain. Okay, yeah, the price hasn't done as well from 2022 to the current moment. Solana obviously has done very well, $7 to 150, whatever the price is right now. But if I'm going to deploy a fresh unit of fiat capital into the system, I think that Ethereum could outperform Solana in this next sort of 18, 24 months.
Arthur Hayes focuses on the illusion of stability in the current financial system at the outset of his most recent breakdown. Hayes contends that popular headlines may give the impression that markets are quiet and central banks are controlling inflation, but this is untrue. Under the surface, he perceives escalating systemic dangers brought on by unrestrained fiscal policy, excessive debt issuance, and the unavoidable consequences from continuous liquidity injections. According to Hayes, what is being overlooked is the true narrative, not what is being reported. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
So how do you see the effect on the market from this?
So it's a bit confusing, the recent results, because we are in a period of the debt ceiling. So the US government cannot borrow net more money. There's various different ways in which they can spend money and still remain underneath the debt ceiling. The first is the Treasury general account, like their checking account. At the start of the quarter, I believe they had something around $750 billion in it, and now it's around 450 odd billion. And so that means they spent money to fund the government. In addition, they have this bucket called extraordinary measures. It's a bunch of government programs in which they can underfund and again, spend more money to fund the government. So taking these three things into consideration, we can come up with an effective borrowing. And I actually was going through the math before this interview, and it appears that while, if you read the press release, it sounds like, oh, the US government is borrowing less money. When you add back all these other factors, if we take a look at first quarter 25 versus first quarter of 24, it looks as if on the first pass that the government is actually borrowing more money than they were in the same period of last year. Now, I'm not exactly 100% sure on this. I've pinged some analysts who are a lot more in the weeds on exactly how the Treasury funds itself during a debt ceiling period, but I wouldn't really take what you read as gospel, because again, it's unclear whether the Treasury is borrowing more or less because we have this extenuating circumstance of the debt ceiling. Last year in January to March, we weren't in a debt ceiling situation, so it's very easy to understand exactly how much the government is borrowing and they're spending. The one reason why I think that the market is really underappreciating how much the Treasury is borrowing based on reading this recent announcement is if you look at the monthly data released by the Treasury, I think it came out a few weeks ago, January to March of 2025, they're borrowing 22% more than they were at the same period of the previous year. So the deficit is higher. So I would expect them to be somehow borrowing more money to fund the government, even if the headline from the recent quarterly refunding announcement says that, things are better than expected because they're borrowing less. So again, I think we're gonna need to see some people who are a little bit more in the weeds on exactly how the Treasury funds itself, what their opinion is of this, to come to a conclusion as to whether this is good or bad for the amount of dollars entering the system. And I believe that the US government has to borrow more money than what we think, and therefore Bessent will have to issue more debt, and therefore he needs to find a way for these individuals to obtain as much leverage as possible through the banking system. And ultimately that means that there's more dollars floating around in the world because the US government is spending more money on stuff. And so that's kind of the TLDR on what a buyback is and how I believe it's positive for liquidity in the market, and which is why I think Bitcoin bottomed in that April 9th and will continue much, much higher as the government continues to borrow money and Bessent does what is necessary to make sure they're funded at an affordable rate.
So do you think that we are in the bull market again now, or do you expect as well the downturn of the price of Bitcoin?
I think we've been in a bull market since November 2022, when the FTX went under 15,000 or whatever the price was, and we're up 6x since then. We had a bit of a pullback, 20-30%, very, very natural for a crypto bull market. So I'm very bullish. I've always been bullish, even from January 20th to early April. We reduced our position a bit, but we were still long Bitcoin, long a lot of ETH. We have some structural term sheets that are coming off in relevant projects, so we've been long the whole time. I think Bitcoin needs to go above 110,000, and on increasing volumes, maybe it reaches 150, 200,000, whatever that level is. I'm not sure, but I think that happens sometime in the summer or early third quarter, and then the rotation starts into various altcoins. I think by the end of Trump's presidency, so end of 2028, Bitcoin will be around $1 million. Or we'll have caressed $1 million. It might be lower than that at that point, but I think we'll get to that nominal figure within the next 3 to 4 years.
According to Arthur Hayes, Ethereum is currently universally despised, which is precisely why he thinks it has a great chance of making a powerful resurgence when market opinion changes. He makes it clear that the story will be driven by the price movement rather than the other way around. Although he doesn't provide a precise price estimate, Hayes says that Ethereum may see a sharp increase if the next altcoin season starts in late 2025 or early 2026. This is mostly because so few people possess it and the majority are still pessimistic. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
I don't think it'll be like 2021. I don't think every single altcoin just goes up, 100x. I think people are a little bit more discerning in what they're actually going to invest in. We'll have a new narrative, whatever that is, of something new that people are going to try to trade, and it'll trade at some crazy price. But the old coin, the dino coins in your portfolio that probably aren't moving for a reason. And I think a lot of those coins, for the same reasons, like high FDV, low float, no customers, no revenue, just some sex listing that went down 95%. I don't really see why those should do well in the next cycle. I've owned gold for a long time. So I have physical gold in a vault. I own a lot of gold mining equities that I think are still undervalued given the massive rise in price in gold. I think that gold can go much higher from here because central banks are buying gold. And I still believe that the US is going to revalue their gold holdings much higher to depreciate the dollar against gold. So, I think gold could be $10,000 to $20,000 by the time we finish with this rally. We were underweight crypto from about January 20th until late March, early April. And now we're mostly fully invested, mostly in Bitcoin. I think Bitcoin dominance is going to continue to rise, maybe to somewhere around the 70% level. And then we're going to start rotating into some high quality shitcoins that we like. So if you use leverage, obviously it's very difficult. These downturns are painful, right? Because you get liquidated, or you have to sell positions, or you have to sell something that you don't really want to sell because you use the leverage. But as a long only fund, we don't really use any leverage, which helps us sort of not care what the price does, as long as we have a conviction that a long-term macro bet is correct. So I think the big change recently is the talk of a Treasury buyback. So Scott Bessent, the US Treasury Secretary, went on an interview with Bloomberg about, I think, April 10th or 11th during the whole tariff tantrum situation. And the interviewer asked him, do you have any tools at your disposal to sort of help the US Treasury market function normally? Because obviously we saw yields rise like 50 basis points over 2 trading sessions when stocks were cratering, and the volatility of the market was up. And so the question was, does Bessent have the ability to do something to help the market? And he said that he had this ability to do increased buybacks. And so what a buyback is when the Treasury issues a new bond and then uses those proceeds to buy an old bond. And the reason why this helps the system is that a lot of hedge funds put on an arbitrage trade. They buy a cheap bond and they sell a Treasury futures contract against it. They take the bond to the bank and they obtain financing for that. Now, the bank is going to give you more financing if it's the liquid on-the-run bond, the newest issued bond, versus a bond that's a little bit older. So if the Treasury is going to take a lot of these old bonds off the balance sheet of the banks and these hedge funds, then they're able to use more leverage to buy more Treasury securities at auctions. There will always be meme coins. I think there's still thousands of meme coins created every day. I think it's going to be a lot harder to get people to trade them and buy them because people lost a lot of money trading these things. And so they learned it's a casino. You're going to lose all your money, most likely. It's very difficult to outperform. There'll be some standout meme coins. I don't know what they are. I'm not really sort of deep in the meme coin degen landscape. But if something really pops from 0 to 100 million market cap and has a good volume and trend, then I'll trade it.
So did you get rid of your meme coins by now?
We don't own any meme coins right now.
Do you plan to, or it will depend on
Depends
the
on the
market?
price action. I think Ethereum has a better performance outlook, mostly because it's very hated. Everyone thinks Ethereum does nothing. They haven't done anything correctly. But number one, it still has the most TVL. It still has the most number of developers. It still has the most secure proof of stake blockchain. Okay, yeah, the price hasn't done as well from 2022 to the current moment. Solana obviously has done very well, $7 to what is it, 150, whatever the price is right now. But if I'm going to deploy a fresh unit of fiat capital into the system, I think that Ethereum could outperform Solana in this next sort of like 18, 24 months bull run.
Arthur Hayes ends by giving a broad overview of the state of the market, including everything from gold to Bitcoin, Ethereum, and other options. He discloses that he has been holding actual gold for years and is still optimistic, particularly given that central banks are still purchasing it and that the US government may revalue its gold holdings in an effort to devalue the dollar. Regarding cryptocurrency, Hayes notes that his funds saw a dip from January to March but is now fully recovered, primarily in Bitcoin. Before switching to premium altcoins, he anticipates that Bitcoin's market dominance would increase to over 70%. He cautions against using leverage, pointing out that although it can increase profits, it also makes losses more excruciating. By completely avoiding leverage, his fund is able to maintain long-term macro investments without being swayed by transient price fluctuations. He also draws attention to the US Treasury buybacks, a significant event in the bond market. By enabling hedge funds to employ greater leverage with more recent liquid bonds, this strategy may contribute to increased liquidity. According to Hayes, this indicates that the government is intervening to calm a tense treasury market. According to Hayes, Ethereum is incredibly undervalued and unpopular, which makes it the ideal candidate for a dramatic surge. Ethereum continues to lead in network security, developer activity, and total value locked despite recent poor performance. He contends that because to mood shifts and under ownership, Ethereum may surpass even Solana once the altcoin season begins, which might be in late 2025 or early 2026. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.